Hello, folks, and welcome back to another edition of the Daily Crypto Byte. Today is Tuesday, September 28th, and it feels a bit like Friday, I think because we're going to Vegas tomorrow. So lots to be excited about this week. The markets, however, not looking too hot today. We talked a little bit about the 10-year Treasury yield yesterday, John, and the velocity that was seeing. I think that's bleeding into the markets today, and we're seeing some continued fear. So we'll talk about that and a whole lot more today. But before we dive right in, John, CJ, how you guys doing today?
Doing well, Monty. Doing well. Not sure what that big sound is back there. Somebody's doing something back there as usual. But yeah, you're right. It's those three V's: velocity, volume, and volatility. And good morning, Josh Singh and Bill. But the issue is the speed, the velocity right now. That's really a significant issue for the 10-year. I really don't think it's going to zoom to 2% because, quite frankly, guys, here's a dirty little secret. The Fed ain't going to raise rates. Even though they're going to talk about it, they will taper, which means they will reduce their bond buying and the collateralized debt obligations or, mortgage-backed securities and things. They'll cut back on that and they'll see how that goes. But honestly, I do not see them trying to move interest rates up. So I think this is just people getting ahead of it. And consumer confidence, boy, it's flagging right now. It was, we got a consumer confidence reading today, Monty, and the September consumer confidence, they were expecting 115. It came in at 109. Now, on the good side, that's that's above 100. But on the bad side, we just keep missing consumers. And by the way, the projection going forward, the expectations index is at 86 versus like a 93 projected. So consumers are not feeling as confident. The new orders, according to the Richmond Fed, are down and expecting to decline further. They were looking for a gain of 10. Instead, it comes in -3. So again, I'm not trying to pee on anybody's parade here, but for everybody that says the economy is just booming, no, it's not. No, it's not. It's got a lot of free money, and that's causing demand to be up without enough supply to meet the demand. So prices are up. But I think all of that contributes to my view that we are not going to see the Fed move on interest rates until, if they move at all, it'll be 2023. It will not be, as Bullard or a number of others have said, 2022. Just will not happen, my opinion.
Yeah, thanks for sharing your opinion, John. I also wanted to get your take on one more thing. Some people in our community were talking this morning about the DXY and the dollar index and how that's been performing to start this morning. I'm going to pull up this chart real quick because, as you can see here, it is showing some significant velocity to the upside. And I was just wondering what you guys think this or how this piece of the puzzle kind of ties in to the market here.
Do you want to?
I think it shows. Yeah, I think it shows risk-off behavior. It shows, I mean, just look at your indices that you have above the DXY and the watch list. You know, you have the S&P 500 down 1.5% nearly. Same thing with the Dow, almost down over 1%. So it looks like this is a flight to safety or a flight to cash. And to tie this back into Bitcoin, we've usually seen, in terms of like a macro viewpoint, we've seen an inverse relationship between an increasing dollar and a decreasing Bitcoin. Doesn't mean that Bitcoin can't rally with a strong dollar. It just makes it even harder. It's more to overcome for the overall market. So, the DXY, the TNX, both are very critical here. And the fact that they're spiking is going to make it hard for equities to rally as well as Bitcoin, and is going to lead to a flight to cash.
I agree. And you're seeing it. I think if we did not have that, I was listening to Willie Woo this morning. And Willie, of course, is a longtime crypto watcher. And Willie was saying it's really, really different right now. It's not like 2013. It doesn't feel like 2017 either. That's not to say we won't go higher. My projection, personal projection, is that we still go higher into year end. And, we start back up with earnings in a couple weeks, guys. I think that might be a time when we see, that anticipated rise into the Fed meeting in November. So in other words, these getting through this week when we really don't have earnings and so forth, and instead we're all just focused on, China continuing to pump money because they have to. To your point, Monty, about that DXY, and CJ's, as that just moves up, it is people just shunning other currencies for ours, the United States, and I think that's going to keep happening for a while.
Yeah, that seems to be the case. CJ, I want to toss this one to you because I feel like, there's a bit of fear in the market right now and in our community, given a lot of the factors that we just talked about. And one of our oldest members, Bob Dittrich, he put a pretty insightful comment or thoughtful comment in the chat. And he says, with the stock market weakness, inflation, 10-year rising, and crypto still moving in tandem with the equities, what is going to be that catalyst for the next leg up? Any thoughts on that?
Yeah, that's a tremendous question. I think that there's kind of a two-part answer. One is that we're already seeing the supply shock. We're seeing more whale holders accumulate and actually buy this dip. That's not what we saw in 2017. Once when we had, our blow off top after 2017, any reaction rally that we got at that point, large whale holders were distributing into. They're now accumulating. So that's an inconsistency that we're not seeing. So automatically that's a scarcity of supply, which is inherently makes the market more volatile. Now, in terms of a catalyst and what could send things higher, I like Doc's idea of, or just the concept that we have a lot of tech earnings coming up in the next month or two. If we have favorable outcomes of that, that could surely spark a further rally in Bitcoin as well. So those two characteristics. And I would like to share a chart of those supply and those holders, because if you do not want to pay for the $700 Glassnode subscription, even though I really like it, there is a free site known as Check On Chain, which gives a very lovely breakdown of various supply and the holders that we've seen in Bitcoin. But if we go up to these top holders and what they've actually done during the market, we can see that, during our peak at 60K, we actually had distribution. It's tough because it's not on a log scale here, but you can see a subtle decrease in the amount of whale wallets as they were taking profits. But now that's really not what they've been doing. Ever since our capitulation event, which we fell to 29K, large whale holders, both of these categories, are slowly coming back up and are slowly accumulating. And like I said before, that's not consistent with what we saw after our blow off top in 2017, leading into the 2018 and 2019 bear market. So we'll see. It's going to be interesting. And it's it's making a lot of bulls nervous right here with the equity market putting in that really bearish lower high on the S&P. But
yeah, thanks for that information, CJ. And I completely agree. I think the supply shock and the accumulation of the whales is the one thing that's kind of giving me hope that this second leg of the market is coming soon here. And I think that, if you take a look at Bitcoin's price performance over the last couple of weeks here and take into consideration all those factors that Bob was talking about, all those, negative market factors, I think that ordinarily Bitcoin would not be holding up as well as it is right now. And that is because whales are still accumulating. There's very little retail participation in the market at this current point in time. That goes back to what CJ was talking about with that risk off market environment and that rush to get into cash. I think right now there's just very little retail participation. The market's being entirely bolstered by whales who are accumulating at this 40K level. So I think that's really what's bolstering the market, and I do anticipate that that's what will be the catalyst for the next leg up as well.
We've got one of my favorite cryptos, Ethereum, one of the biggest losers today, almost 6%. Polkadot right there with it. So two of the best, I think, protocols out there are really taking it on the chin right now. Let's see what else we got here. Binance coins down 3.5%. XRP back under $1 and staying lower, down another 3%. Doge, 20 cents. By the way, CNBC finally ran that crypto trading hamster story on their site.
I saw that. Mr. Gox.
Yeah,
He's doing
but
well.
they don't tell the whole story, though, because Mr. Gox, I think, is still long Doge, according to, the site. And he's taken it in the pants hard on Doge. So he ain't up 20% or 25%. I think that Doge trade was so bad that it took almost all of his gains away. But they sort of mention it as an afterthought in any of the articles, because most of the articles are several weeks old. They're basically regurgitating somebody else's stuff. But Mr. Gox, unless he is totally out of Doge, is still taking losses in a big way.
Well, speaking of, did you guys happen to pick any Doges of the day today? I know we've been talking about sort of the risk-off attitude of the current market and how some of the altcoins are underperforming, but any that have caught your eye over the last 24 hours here?
I have one that is an interesting project that I just want to put on your guys' radar that I think would be interesting, but not necessarily something that I'm hopping in today, per se. And that has to do with a project known as Step Finance. So I guess I'll start with the summary or the technicals, rather. I mean, they're not great. Obviously, we have the inverted hammer candle really testing support at the 20 smooth moving average. CCI turning up a little bit, but really not a whole lot of momentum. I think the thing that's interesting is that we've really seen a lot of volume here compared to basically no volume that we saw all throughout the decline. So it's interesting, shows that people are actually stepping up and a little bit more interested in this project. But as to the fundamentals and what Step Finance actually is that it's a tool or a kind of a platform or aggregator for decentralized exchanges native to Solana, specifically Serum being the primary focus. And this is a site that is going to provide a lot of interesting metrics to yield farmers and liquidity providers who want to participate in these decentralized exchange ecosystems. So, you can check out that dashboard a little bit. You can check out, their app and what they do. But I think DeFi on Solana has a lot of room to the potential upside, and Step might be one of those projects that kind of gets swept up into it. So just one to put on the watch list within the Solana ecosystem, but that would be my Doge of the day equivalent.
Very nice. Thank you for that, CJ. I just have one quick one, and it's not, I don't think it's a Doge that should be entered immediately, but it's an asset that I'm going to be watching while we're in Vegas here, because I think that we may get an opportunity to enter at a pretty nice price point here. So the asset I want to talk about today is Cardano. Obviously, I mean, this thing has been, Doc has been trading in and out of this thing. It's kind of been a volatile couple of weeks here for Cardano. But the reason why I like it now is because of the fact that it's approaching some pretty critical levels here. So I want to take a look at, I want to start by looking at, this critical level here where we wicked down to in the middle of September, just a couple weeks ago on the 20th. and that is just below $2. We're rapidly approaching this critical level of $2, and we haven't been able to, stay below that level for more than a couple of hours when we've retested it. Bulls have relentlessly bought up this dip below $2, and now we're, on course to hit this level in the next couple of days here. One thing that may happen is we may go a little bit beyond this level and retest the critical level here at about 1.85. This is where we came down immediately when we were making our new all-time highs, and we saw a lot of secondhand buyers come in and propel us to these new all-time highs here. So now that we're kind of heading back to these levels, we've got declining bullish volume as we approach those levels. I think it bodes well for a potential bounce from this $2 level. So what I typically do is wait for confirmation of a bullish engulfing candle and a nice uptick in volume. I think I'll do that same thing here. Just give it a couple days, wait to see if it comes down and retests this $2 level, which is looking like an inevitability. And if we get a similar relentless dip buying below that level from the bulls of Cardano. So that's what I'm going to be watching over the next couple of days here, and perhaps looking to pick up as it retests those critical levels.
I'll throw one out quickly, Monty, also, and that's DCR or Decred. In the last month, this one is down 50%. It lost half of its value. It was 190. Now it's 98. Volume's picking up slightly. It's only up 9% in the last 24 hours, but that's something. And just like Monty said, I think you could watch for a little pickup further in volume. And if you see that, boy, picking it up at a 50 some odd % off sale doesn't look so bad. DCR is the symbol, and 24-hour volume is about 18 million.
We'll definitely check that one out. It seems like there's going to be, the potential to pick up a lot of alts at price points we haven't seen in a couple of weeks here over the next couple of days. So we'll be watching for that. And as always, CJ and I will be hanging out in the crypto room, the new and improved crypto room, I might add. So if you'd like to head over there and try it out, you can do a trial, a 1-month trial for just $7. You can try it at markrebellion.com/try crypto. We got all sorts of new features. We did a walkthrough webinar yesterday, answered your guys' questions, and showed you all the new features that we have currently and that are coming in the next couple of weeks here. Super, super excited about it. So head over there and check it out if you're looking for a place to hang out and talk crypto. And if you're looking for, go ahead, CJ.
Please show them refer a friend too, and how they can access that on the Market Rebellion platform. If you are a member currently and you refer a friend to Market Rebellion Crypto, not only will you get $25 for each friend that you refer, but they will get $25 off their first month of subscription. So you can find your go-to link at the top of the platform there that Monty is selecting, and share it in a variety of methods. So we encourage you guys to do that and earn that $25 for yourself and your friend. And as always, Voyager as well, if you want to do the Voyager
Rebel
plug.
25.
Yeah.
Put in Rebel 25. They'll give you $25 in Bitcoin, folks.
That's right. And you can earn up to 10% interest on USDC and 12% on assets like DOT. So definitely head over there and check them out. But that's all we got for today. Thank you guys so much for watching, as always. And we'll be back tomorrow with another episode of the Daily Crypto Byte before we head off to Vegas. So thank you guys so much for watching. Have a great rest of your day, and we'll see you again tomorrow. Take care.